If you already know that you owe back sales taxes, maybe it's because you didn't register, maybe it's been because you've been collecting sales tax but not remitting it for years. There's a program available to allow you to come clean with the Florida Department of Revenue and get most, if not all, of your penalties waived. However, most business owners just simply do not know about this program until it's too late, if they find out about it at all. In comes the Voluntary Disclosure Program. The Voluntary Disclosure Program allows businesses or taxpayers in general to come forward and disclose their liabilities for a period of time, usually up for the past 3 years or 36 months, and allows them to come clean with it and then get on the right track for moving forward. The benefit of that program is businesses don't have to look over their shoulder wondering if and when the Florida Department of Revenue is going to come and audit them sometime in the future. It also helps to reduce their overall exposure by mitigating how far back the Department of Revenue can go by limiting their look back period. And so if their exposure is limited to 5 years, but the voluntary disclosure will limit their liability to just 3 years, a huge savings. What the program does, it not only can potentially reduce the look back period for a taxpayer or a business, but it can also help to have penalties completely eliminated or dramatically reduced. And this is in comparison to a normal run of the mill audit. You're still going to owe the tax and interest. However, it's something that can still alleviate potentially your liability. Doing this earlier than later can change the math significantly, and here's why. If your exposure continues to accrue and become larger the longer you're in business, well, then it's best to get this done now, rip off the Band-Aid and pay the state and be done with it, rather than waiting a year or two and the liability being all the much larger when it comes to it. Common scenarios that lead to here can be if you're an out-of-state seller and you're not registered for sales or use tax purposes. You might find that you have nexus or a sales tax registration requirement with the state of Florida and have exposure by making sales into the state. Or maybe you brought your employees into the state even though your location is outside of Florida. That can cause significant issues in the state. It can also be if you inherited bad books. Maybe you took over a business. Maybe you bought a business. Something to that effect to where things just weren't quite done correctly and now you need them to. And of course, there's businesses that are just simply engaged in business and don't realize or understand that what they're doing is subject to sales tax in Florida, and thus they're creating exposure for going forward. So, what are the steps for engaging in a voluntary disclosure? Well, if you're going to do it by yourself, you got to be very careful that you don't mess it up. But one of the first steps will be to contact the Florida Department of Revenue's Voluntary Disclosure Unit directly. From there, you file a formal application. It's more informal than anything, a simple letter will do. You file that application. You then file a registration application through that unit in order to get registered, and you disclose how much you owe. They send a bill for how much you owe with tax and interest. Again, penalties are usually going to be waived at that point in time. And then from there, you pay the bill within 30 days. Sometimes a payment plan is available, sometimes it's not. You have to go to a different unit to even have a chance for that. And then once it's paid, you're done. Your voluntary disclosure is done and you're on the right path for going forward. Here is the trap, though, and probably one of the most important things to know. If you do not take the right steps in the right order, you can completely blow up any chance and opportunity you have at a voluntary disclosure. What I mean by this is the voluntary disclosure is only good until you are contacted by the Department of Revenue. So if you get contacted by them, then your chances of getting into the voluntary disclosure program are zero, if not very close to it at that point in time. So you have to be careful that what you do doesn't count, if you will, as a prior contact that would otherwise disqualify you from a voluntary disclosure. And by the way, getting an audit notice counts as a contact. Getting a collections notice counts as a contact. Getting a call from a Department of Revenue person saying you need to do this can count as a contact. The list goes on and on. So, in conclusion, if you believe that you owe sales or use tax for Florida or any state for that matter, that is something that you need to jump on immediately, and feel free to call me to discuss ways that we can help you. The link's below. Check out the description. Hopefully you like and subscribe and check out the other things on this channel. Thanks so much.